What's up, everyone? Welcome to today's market analysis and trade recap session. Today was quite an unfortunate day. We got wicked out by a few ticks, and then the price went straight to our take profit, which would provided us with some nice capital for the day. But that's all hindsight, and we'll get into why this trade was not that great in the first place, and a trade that could have been created down here would have been optimal. So let's take a look and overview what happened today on NQ and ES and the futures market overall. So we marked our liquidity levels, right? In the Discord yesterday, in my analysis section, we said that we expect price to come down to this liquidity level and then head towards these gap fill and POC levels, right? And on ES, we did do exactly that, and on NQ, we almost did that. We got pretty close, but we didn't get exactly there. But our analysis was still correct due to the exemption and strength of this move overall, right? Just look at the size of these aggressive buyers that pushed us almost to this gap fill area. And this was to the area where ES did gap fill, so that does make it correct, right? Now, from that gap fill, what we saw price chopping, going down until we fell down further, and until we eventually headed towards these 30-minute demand zones. We also had liquidity at the bottom of these 30-minute demand zones, as well as some main liquidity down there, but this overall area is a key level where we expect lots of liquidity to be placed, and we will be noticing how the market reacts from there. So at market open, we do start showing strength towards the upside. We create a level here. Now this level could be used as a strong area of liquidity, but we are still watching as always, right? On ES, that overall area is our bookmap liquidity relative area, which is going to be these highs right here. Now, once you get to those highs and you push down aggressively, you create some fair value gaps, but once we take out this liquidity here, we see an instant splurge of buyers. And what we see on bookmap around that time, around 9, is that we do take in a lot of our main liquidity at the low side, and that is demonstrated. Let's find it on the charts. Let's see, this is at 9, right? Perfect. So at 9, let's take a look. We saw all this selling happen, right? And then we tapped into this level, 5350. This 5350 area was very essential, as this was our main liquidity towards the downside, was supported by bookmap liquidity as well. So since we swept this, we don't necessarily know quite yet if we're going to continue going towards the downside or reverse back to the upside, right? Even though we did push through this liquidity. But as we keep moving on, one thing essential happens that shows us that price may actually want to continue towards the upside. And what is that? That is the creation of these barriers, as you can see here. Now, these are clear barriers. Although they aren't that much strength, there are clear barriers and clear movement upwards of the price. That's showing that it's trying to support price going up. And as we see, unfortunately, this first barrier couldn't quite hold. But this second barrier does actually hold. Typically, you want to wait for some sort of reaction when you enter from a barrier nonetheless, right? So in this barrier, we do see nice rejection from this barrier. Now, here could have been a great trade, and this area seems to be around 5352-ish areas, right? Let's go on to ES and see where that is located. 5352. 5352. So it's right there. Now what we could have done from there is kept our stop loss below these lows. So maybe even kept it, since ES, I'm gonna estimate 5 ticks below just to leave some room. And where would we target? We would target our bookmap liquidity levels. Now, would you look at this trade setup right here? This is a 1 to 5 risk to reward ratio trade with simple and consistent confluence with the trade as well. Unless we get any invalidation signals, this trade should play out like we've expected it to, even with the factors of these fair value gaps are nonetheless. These do not matter unless we see some type of order flow or some type of confirmation within these areas. So of course, this is going to be an area to potentially invalidate our trade. But even then, let's just take a look at what our profits would be. That would still be a 1 to 2 or 1 to 3-ish risk to reward, which is excellent. Now, unfortunately, we did not take that trade because we did hop on the markets a bit later today. And because of that, we entered around this type of area. And what do we see happen? We saw that we're creating inverse fair value gap as we pushed above this fair value gap. And we understood that POC, point of control, and our targets were towards the upside on order flow and the charts. So we were wanting the longs to come in, right? Now we entered at 9:45. Once again, shout out to Alex with Think with Bookmap, or Live Alex Think with Bookmap. This challenge is a great resource I recommend many traders that are looking to get into Bookmap to use. Or if you already have Bookmap, you can use this to replay and analyze what was there on Bookmap as well, because it's a pretty easy and free tool that many individuals can use with maybe a 1 to 2 second delay, which is pretty good. Now we entered around this time, right? And why did we do that? We saw all these barriers come up with price, and we saw barriers forming here as well. So we just wanted to gauge the market and enter the long. So we did exactly that. I'm not gonna lie, we kind of did force this trade, and there was no actual reason for us to enter where we did enter, as it's not an area of good value. And typically when we enter, we want to make sure that we're at a good value within the market that will allow us to make probable and reasonable trades, right? So this entry was already pretty bad, and a better entry would have been waiting for retracement and waiting for this barrier to touch. Another thing I want to emphasize is, as we're coming up towards, sorry, my mic got cut out, but since we were not able to get an entry there at good value, we should have at least waited for a retracement within this micro range, so we could have got a good entry. And you can use that using our V2 levels, right? We could have at least waited for entry down here, but we did not do it. We were essentially kind of forcing the market to do what we wanted it to do rather than trading with the market, because we don't want market does not want to do what we want it to do. The market will do what it wants to do, and we as traders have to be able to identify it and capitalize off of it as well. So one clear invalidation signal. Oh, I think this is where I left off before I've got the technical issue, but I apologize about that. But as we're coming up to these 5385 levels, which do line up with this bookmap liquidity level relatively, right? As we're coming up to those levels, what do we see happen? we see seller barriers start to pop in, and they are moving down with the price. Now, this is a pretty big invalidation signals for the longs, right? And that could mean that we take out of our position here if we did enter down here. But we are still long because although this invalidation did occur, there's no clear signal of a breakage of this barrier, and since we're trading between barriers, we could expect consolidation. Additionally, overall CVD is looking to shift towards the green side as well. So this would be an area that you either get out if you did take longs from that perfect entry like we've mentioned before, or take partial profits, or exit completely. It's always better to be safe than sorry. But now, look what happened. We broke this barrier right here. And as we broke this barrier, we just chop around really, right? So I definitely think this would be an area where people exit off the longs when they see this occurring, right? So that could be at 5375. So assume we did take that perfect long setup at 552. Place your stop loss there and exit at 7.5, right? Yep. 7.5. That's a 1 to 3 risk to reward ratio, and that is a pretty good trade. We entered this clean portion of the upside while minimizing all this chop right there, right? And we essentially entered long when we were creating this chop or mini downside. And there was no clear confluence of a continuation upwards other than liquidity and POC. But on Bookmap, this is quite bearish for the moment being. It is not until we actually break through and take these barriers where you get a bit more bearish confluence, right? But now we're still continuing to sell, chop. We just chop overall, right? Now look what happened here. From these areas, we're holding this 65-ish level pretty nicely, and we couldn't break through it. Now, there are not many barriers towards the upside anymore except for 5380, but that is essentially ignorable because of the strength of it as compared to these liquidity levels up here. And now we're starting to create liquidity levels at 5387.5 as well. So the more we create liquidity levels above as well, that is a bullish signal. Now, if we keep moving forward, we do see us break this level really nicely. Now, from what I see personally on the charts, there really weren't any signals on Bookmap at least that price was going to suddenly splurge up and push above that liquidity level like such. And that's why we are not considering the trade which we actually took today. Did I delete that? Yeah, there. This was a trade which we actually took today, and we did get wicked out, like I mentioned before. We took along with all the invalidation signals that we talked about, and we got wicked out when we broke that barrier, like we mentioned before as well, right? And then right after that, what did price do? Price went straight to our take profit level and then bursted down towards lower liquidity levels as well, which does show that our long analysis from down here upwards was pretty correct. And this could have been correct, but our execution was quite wrong. One way that, even though our analysis was wrong during this portion, a way that we could have avoided this loss and actually taken profit is by simply allowing ourselves 10 ticks below this low for some room, right? So now it's 219, so 220. So if we simply just kept it at, actually no, we should keep 20 ticks below 20, so 240. If we simply kept our stop at 240 ticks or 60 points, our trade would have played out without getting ticked out, and that would have resulted in some nice profits today. So I think we should establish that 20 ticks is the standard rule for the amount of room you want to give for your hard stop. Your mental stop can stay at those lows, but your hard stop, give it around 20 ticks on NQ and 5 ticks on ES for some room to allow your trade to play out. And that's essentially it for today. I don't see too much else to discuss, right? In conclusion, essentially, this trade that we could have potentially placed here if we entered on the market prior could have been a very nice trade, allowing us to take these type of profits at a 1-to-3 risk to reward ratio, where we did see invalidation signals around this portion. But since we entered the market late, we did take some longs here because of some magnets or some targets that were above. But we started to see invalidation signals pop up at this point, and even though that occurred, we still entered the trade, resulting in our eventual wick out of the market. And from that area, really, there was no thing in between my strategy that would have predicted these longs, other than simply a retouch of this fair value gap. But we look things at a very mechanical and auction-based mindset, and that wouldn't work within the span of our strategy. This was all invalidation signals, and because we essentially ignored those barriers forming, we got wicked out. And since we did not leave room in our stop loss, we got wicked out once again as well. Now that's actually all I have here for today. If you want analysis like this and daily recap videos like the ones you're seeing every single day, please subscribe to the channel and join the Discord. The link is in the description down below. Everything is completely free, and we have free access to help traders like yourself learn and truly progress through our progressive models as well. We and the community try to encourage each and other to make their trading journey supportive, and we want everyone in the community to push each other up and do that through our progressive programs within the community. That's why I highly encourage you to join. Now, that's all I have here for today. If you have any questions, like I said once again, join the Discord, or you can also leave a comment down below. I'll try my best to answer there as well. That's all I have. Thank you so much, and I'll see you guys tomorrow. Bye.